about 93 odd points higher in trade today, so eased off a little bit at least from the top, but we're still latching on to that 23,300 mark right now at least. There's been a big downgrade on trend from the House of Kotak, and they've significantly slashed the target price as well, lower than 6,000 this time around, 2.5% lower for trend, and it has been under pressure of late in any case. There's ITC as well lower, TCS is lower. Not a whole lot moved by Reliance as well ahead of its numbers. So let's chat exactly that. What is the expectation from Reliance when it's going to declare its numbers post-market as today? Probal joins in on the show right now to talk about his expectations. Probal, hi, morning. Good to have you on the show. What do we expect from Reliance? Because there's not much, expectation, or rather high expectations from the O2C and the petchem business. I guess all hopes are pinned on Jio.
Yeah, very good morning. I think, yes, the numbers are expected to be higher on both a YOY and QOQ basis, but, it's basically mid to low single-digit improvement that we are talking about. Our expectations are that consolidated EBITDA would go up by about 4% YOY, and PAT would be up about 6% YOY, which translates to about an 8% QOQ and 10% QOQ improvement, respectively. OTC, yes, it actually was at a fairly low level last quarter. So at least on a quarter-on-quarter level in OTC, at least on the refining side, there is some improvement. Petchem continues to remain muted, and we see, low to mid single-digit improvements across Geo and retail as well. So on the whole, it's a slightly improved quarter if we look at the second quarter of this year. But I think there's probably some more positive signals that are needed on Geo as well as, unlocking of value that will basically drive the stock over the slightly longer period.
What do you think has been keeping the stock under pressure? Because while rest of the market has moved, Reliance was fairly somber. In fact, last year was the first year in 7 to 10 years that Reliance was in the negative. What's keeping the stock under pressure, and what will take it out of the woods?
So I think there are three aspects to it. One is earnings growth, second is cash flow, and third is, overall, prospects of unlocking of value and new businesses. So if you look at earnings growth, I think what has turned around slightly negatively over the last couple of quarters is that the momentum in retail business has slowed down. If you really look at what has driven earnings growth over FY 21, 22, 23, and even parts of 24, it was actually the very, very stellar growth that was happening on the retail front. It was growing at 30, 35, 40% even in some quarters. Once that earnings momentum slowed down a little bit, then on the whole, even on a consolidated level, the earnings growth actually slowed a little bit, number one. And then that brings into focus the fact that, CAPEX continues to be slightly higher, I think, than what the street expected. They still continue to probably spend in upwards of 1 trillion rupees a year. And what that means is that FCF yields and return ratios, I think, continue to remain tepid. Now, what we do have in terms of soft guidance, in terms of our understanding, is that now with 5G CAPEX having been done, enterprise is starting to really pick up. Geo can actually come back into the story in a very big way, with both ARPU improvement as well as subscriber addition and the enterprise part of it really starting to contribute. So once that starts to happen, and there is hopefully a recovery in the broader consumption environment in the country, these two would probably start to really bring some much needed momentum back. And of course, thirdly, any news, any development we have around unlocking of value from retail or Geo, or any milestones from the new energy business, I think that will also be an additional trigger. But there's a whole lot that has combined to probably disappoint the markets. But then there's probably a whole lot of monitorables that can turn it around as well for Reliance over the next 12 to 18 months.
On that, what's there in the store when it comes to Reliance, but talk to us about the valuations as well, because recently, and given the underperformance of Reliance, a lot of these brokerages are highlighting that the valuations hit its COVID era lows. What's your take on this one? And at this point in time and triggers ahead, do you also find the valuations quite attractive for Reliance?
Well, to be honest, we had an ad rating on the story, but our target price was around 1490. When we had last published. Obviously, the stock has fallen a bit from there. So, we will probably wait for the results to come to review our rating. But in terms of valuation, yes, obviously, compared relative to its own 5-year bands, I think it is definitely, trading at slightly lower levels at this point of time, whether you look at earnings multiples or EV, EBITDA, or even price to book. So from that perspective, definitely it does look like, there's a bit of overcorrection that's happened in the story. But as I said, for a formal rating, we would probably wait for our post-result review to be able to comment on it.
Understand, Prabal, of late that the Singapore GRMs have crashed quite substantially. Plus, of course, rupee has been weakening. How does this impact some of these oil and gas companies?
So I think the Singapore margin crash, one has to look in from a perspective of, timing differences as well. To be honest, what happens when crude actually rises so fast, so sharply, and in a very short period of time, product prices tend to sort of correct with a lag. So I wouldn't worry too much about this 1.5 or less than $2 Singapore GRM that's come through in the last couple of days. I would believe that probably 3.5 to 4 probably remains a fairly decent level to sort of build in or factor in over the next 6 to 9 months. Having said that, the rupee depreciation is something that is definitely a negative for all Indian, oil operators. At the end of the day, we are all price takers, and we import 80% of our oil and more than 50% of our gas, which is all priced in dollars. So obviously, rupee depreciation is something that will add to the input costs, which you can't really pass through because, again, on the end product also, you are a price taker rather than a price maker for all practical purposes. So this is something that will remain a key monitorable in terms of how the rupee behaves. And we'll just have to see how, the Indian players actually navigate this higher cost environment because of currency.
Lastly, talk to us about the Jio, because there's been expectations of tariff hikes probably in March, but this time as well for Jio, we are expecting an ARPU jump of 6% sequentially. How are you looking at the numbers, as well as what are your expectations of the tariff hikes, like any percentage or any number that you can put through?
I think, our telecom analyst Sanjesh is probably better positioned to speak on it, but the numbers that he has even for this quarter suggests that there's a small ARPU improvement and there's probably 2 to 3 million net subscriber addition, which is quite a sharp improvement from the 10 plus, I think, million net subscriber reduction that happened because of SIM consolidation and cleanup post 5G adoption that happened last quarter. And he does build in a steady improvement in tariffs going through for the rest of the year as well. So I think there's very clearly an expectation on the street that, there's probably 1 to 2 more rounds of tariff hikes that can come through. And I think our base case estimates build in, I think, 206 odd rupees of ARPU for the full year, for this year. And then probably some further improvement as we go along.
Okay, Prabal, on that note, we let you go. Appreciate you making time and speaking with us. So that's about the entire sector and, of course, Reliance Industries, what to expect, and Jio as well as retail segment. What are the internals to watch out for?
If you like this video, then like, share and subscribe to ET Now.